Hello, my friends, and welcome to Isabella's Mind and Money. Smart thinking, smart earning. I'm Isabella, your host, and together we'll explore the ideas, tools, and strategies that shape our future, from artificial intelligence and online business to psychology, habits, and, of course, money as a tool for freedom and success. Today, we have a fascinating podcast topic: AI plus blockchain, the future of finance. Joining me is Adrian Cross, a crypto and AI enthusiast and independent researcher who focuses on how decentralized technologies combined with artificial intelligence can reshape the financial world. Adrian, I'm really excited to have you here today. Welcome to the show.
Thanks for having me, Isabella. I'm really excited to be here. Decentralization is powerful, but with AI, it becomes unstoppable.
I love that line already. Sounds like we're about to dive into something really transformative. So let's get started. Adrian, can you explain why AI and blockchain are often mentioned together these days?
Absolutely. The short answer is synergy. Blockchain provides secure, decentralized infrastructure, while AI brings intelligence and automation. Together, they can transform finance by improving everything from fraud detection to algorithmic trading and risk management.
That makes sense. And I've been reading about some real-world projects using AI to optimize DeFi protocols. Can you give us an example of how that actually works in practice?
Sure. Imagine a lending platform that uses AI to analyze borrowers' behavior and creditworthiness in real time. On top of blockchain, all these decisions are transparent and immutable. This reduces risk for lenders and makes the whole system much more efficient.
Wow. So it's like the system is learning and adapting on its own, but everyone can see it happening.
Exactly. And it doesn't stop there. AI can also predict market trends, optimize smart contracts, and even automate complex investment strategies, all while leveraging blockchain's trustless environment.
I see why people are so excited about this combination. But with all this hype, there must be some challenges and risks too, right?
Absolutely, Isabella. While the fusion of AI and blockchain is groundbreaking, it's essential to approach it with a clear understanding of its real-world applications and the challenges it presents.
Could you provide some concrete examples of how AI and blockchain are being integrated in the financial sector?
Certainly. One notable example is Remitix, RTX, a decentralized finance platform that aims to revolutionize cross-border payments. In its recent pre-sale, Remitix raised over $23 million, selling more than 640 million tokens. The platform plans to launch a wallet supporting over 40 cryptocurrencies and 30 fiat currencies, enabling real-time foreign exchange conversions and bank transfers in over 30 countries. This integration of AI allows for dynamic currency conversion and fraud detection, enhancing the efficiency and security of international transactions.
That's impressive. Are there other platforms leveraging AI and blockchain in the DeFi space?
Yes, platforms like Aave and Compound are utilizing AI to optimize lending and borrowing protocols. AI algorithms analyze market conditions and user behavior to adjust interest rates dynamically, ensuring liquidity and minimizing risks. Additionally, Uniswap v4, with its recent upgrade, introduces hooks that allow developers to embed custom logic into liquidity pools, enabling more sophisticated trading strategies and reducing gas costs by over 99%.
It seems AI is also enhancing the functionality of smart contracts. Can you elaborate on that?
Absolutely. Traditional smart contracts operate on predefined logic, but integrating AI allows them to adapt to real-world data. For instance, NodeGo AI is a decentralized network that enables users to monetize unused computing power for AI and blockchain applications. Their platform utilizes AI-driven smart contracts to facilitate secure and efficient transactions, ensuring that agreements are executed based on real-time data and conditions.
These advancements are fascinating, but with all this innovation, What challenges do developers face when integrating AI with blockchain?
One significant challenge is scalability. Blockchain networks like Ethereum, despite their dominance in the DeFi space, often face issues with transaction speed and high gas fees. The upcoming Fasaka upgrade aims to address these scalability concerns by implementing sharding techniques and optimizing consensus algorithms. This upgrade is expected to significantly reduce transaction costs and increase throughput, making it more feasible to integrate AI applications into blockchain systems.
So while the potential is immense, the integration of AI and blockchain requires careful planning and consideration of existing infrastructure limitations.
Exactly, Isabella. To ensure successful implementation, developers must ensure that the underlying blockchain infrastructure can support the computational demands of AI algorithms without compromising performance or security.
And thank you for shedding light on these real-world applications and challenges. It's clear that the convergence of AI and blockchain holds immense potential, but it requires thoughtful implementation to realize its benefits fully.
Exactly, Isabella. While the integration of AI and blockchain is promising, it's essential to approach it with a clear understanding of its real-world applications and the challenges it presents.
Absolutely. Now, let's delve into some of the challenges and risks associated with this integration.
Surely. One significant challenge is scalability. Blockchain networks, especially those utilizing proof-of-work consensus mechanisms, can face limitations in transaction speed and cost. Integrating AI into these systems requires substantial computational resources, which can strain the network's capacity.
That's a valid concern. Are there any recent developments addressing these scalability issues?
Yes, indeed. The Fasaka upgrade is a notable example. Fasaka aims to enhance the scalability of blockchain networks by implementing sharding techniques and optimizing consensus algorithms. This upgrade is expected to significantly reduce transaction costs and increase throughput, making it more feasible to integrate AI applications into blockchain systems.
That sounds promising. What about regulatory challenges? How do they impact the adoption of AI and blockchain technologies?
Regulatory uncertainty is a significant hurdle. Different countries have varying approaches to regulating AI and blockchain technologies, leading to a fragmented landscape. For instance, while some jurisdictions are embracing these technologies, others are imposing strict regulations or outright bans. This inconsistency can create challenges for developers and businesses looking to operate internationally.
Indeed, navigating this regulatory maze can be complex. Lastly, what role does trust play in the adoption of AI and blockchain integrations?
Trust is paramount. Users need assurance that their data is secure and that AI algorithms operate transparently and fairly. Without trust, adoption will be slow. Implementing robust security measures, ensuring transparency in AI decision-making processes, and adhering to ethical standards are crucial steps in building and maintaining trust.
Thank you for providing these insights. It's clear that while the potential of AI and blockchain integration is vast, addressing these challenges is essential for successful implementation. Now, let's shift gears a bit. In my own exploration of AI and trading, I decided to test DeepSeek, an AI platform known for its advanced trading algorithms. I allocated $1,000 and followed the AI's recommendations for over a week. The results were mixed. 3 out of the 5 selected cryptocurrencies showed losses, totaling $200, while the remaining 2 had modest gains.
That's an interesting experiment, Isabella. It highlights a crucial point. While AI can analyze vast amounts of data and identify patterns, the volatile nature of cryptocurrency markets can still lead to unpredictable outcomes.
Exactly. So, does this mean AI isn't yet reliable for trading, or is it more about the technology needing further development?
It's a bit of both. AI in trading is still evolving. While platforms like DeepSeek have made significant strides, the technology isn't foolproof. Factors like market manipulation by large players, sudden geopolitical events, and unforeseen economic shifts can all impact market dynamics, making predictions challenging.
So would you recommend relying solely on AI for trading decisions?
Not entirely. AI should be viewed as a tool to assist traders, not replace them. Combining AI insights with human judgment, market experience, and a solid understanding of market fundamentals can lead to more informed and balanced trading decisions.
That makes sense. It's about leveraging AI's capabilities while maintaining a critical and informed approach to trading.
Exactly. As AI technology continues to advance, its role in trading will become more significant. However, it's essential to approach it with a balanced perspective and not rely solely on automated systems.
Thank you for your valuable insights, Adrian. It's clear that while AI holds promise in the trading world, a cautious and informed approach is crucial.
Absolutely, Isabella. And looking ahead, the real excitement lies in where AI and blockchain together are headed in the next 5 years.
Let's start with the big picture. How do you see this integration transforming traditional finance by, say, 2030?
Well, we're already seeing strong momentum. AI-driven chatbots are expected to handle 95% of customer service interactions in financial institutions by the end of 2025, and banks are projected to save $70 billion in operational costs thanks to AI automation. Blockchain, meanwhile, is boosting DeFi. DeFi protocols are projected to generate nearly $377 million in revenue by 2025. Smart contracts will automate 72% of financial agreements, and cross-border payments via blockchain could reach $3.7 trillion. Add to that the Genius Act, passed this year, which lays a regulatory foundation for stablecoins. We're already seeing transaction volumes reach $30 billion daily, with forecasts pushing it to $250 billion in just a few years.
That's staggering. So we're talking about a major shift from legacy banking to a faster, more transparent, and AI-enhanced financial system.
Exactly. If you combine AI's predictive power with blockchain's transparency and speed, you get faster loan approvals, real-time settlements, smarter risk management, and even access for underserved communities. Tokenized securities, for instance, are already trading to the tune of $1.3 trillion on regulated platforms. That's a sign of how powerful the shift can be.
Definitely sounds like a new era of inclusive and efficient finance. What about professions? What new roles or careers will emerge from this transformation?
We're likely to see a wave of new roles. Analysts who blend AI model tuning with blockchain auditing, roles like on-chain AI compliance specialist or smart contract data strategist will be in demand. On scale, AI in fintech is projected to grow from about $18 billion to more than $60 billion by 2033. Meanwhile, hybrid blockchain AI solutions in finance are already rising by roughly 27% in funding. And if we look at the bigger market picture, blockchain tech pulled in about $8.5 billion in 2024, and it's expected to skyrocket to $100 billion by 2030, which means it's growing at almost 55% a year. That's an enormous investment and demand for people with the right technical and domain knowledge.
Impressive numbers. And what about roles in risk and compliance, especially given how fast technology is evolving?
Definitely. Roles like explainable AI auditor, regulatory tech strategist, or DeFi safety engineer will emerge. We already see investments in explainable AI models increasing by 39%, and many institutions dedicating 16% of their IT budgets to AI experimentation. The need for transparency and compliance is going up fast.
So for listeners, the takeaway is this ecosystem is growing fast, and understanding AI, blockchain, and compliance could become a major career advantage.
Absolutely. Whether you're a developer, analyst, or financial professional, gaining skills in AI algorithms, smart contract logic, and regulatory tech will put you ahead. The future will favor hybrid thinkers, those who can marry tech with compliance and ethical frameworks.
That wraps up our exploration of the future. clearer, faster finance, new hybrid roles, and real opportunities for those ready to evolve. It's been such a rich conversation, Adrian. We touched on why AI and blockchain matter, the challenges and risks, and the exciting future that's already unfolding. I truly appreciate the clarity you brought today.
Thank you, Isabella. It's always a pleasure to share thoughts with people who are genuinely curious about where this is heading.
And friends, if you enjoyed this episode, don't forget to hit subscribe, leave us a like, and drop your thoughts in the comments. What topics would you like us to explore next? We're always listening.
And I'd love to hear what people think. These discussions get even more interesting when we bring in different perspectives, so don't be shy to share your ideas.
Exactly. And speaking of ideas, Adrian, I'd love to have you back on the show soon. Next time, we'll dive into a really hot topic, AI-powered cryptocurrencies. We'll look at which coins and projects are gaining traction, what risks investors should be mindful of, and how this trend could reshape finance in the coming years.
That's going to be a fascinating discussion. There's so much happening in that space right now, and I can't wait to share what I've been researching.
Perfect. So friends, make sure you don't miss it. Hit subscribe, stay connected, and remember, smart thinking leads to smart earning. Until next time, take care and keep learning.